Yes, welcome to today's weekly outlook. So continuing from where we had stopped, where we are focusing on pairs which could present us with the opportunity to trade throughout the week. So let's start. Going into JPY is actually at some good key levels. So look at a few JPY pairs before we can go to other pairs. So let's start with the Swiss yen. So with the Swiss yen, looking at it from the yearly time frame, we've been knowing that the Swiss has actually been bullish, meaning it has been stronger than the yen throughout. And if you look at it from this big picture, you realize that the Swiss is generally stronger than the JPY or the yen. So with that being said, we know it is very bullish. But now this is a very high time frame, which is the yearly time frame. We cannot draw very good specific data. We can get the general data on bigger time frames, but to get the specific data that we can use for our transaction, meaning for our sell or buy, we will have to go to lower time frames. So that is where we get more information and more details. So this is very bullish, and this is why we are saying it's bullish, with the lows not being taken away and the highs, like this high here, constantly being taken away. These highs being taken away. So, and then now the other high, which is being broken. So we know that the market is very bullish. So this is all the information we can gather from this highest time frame. So we can conclude that the Swiss is stronger than the yen. And why is that? Because the highs are constantly being taken and new highs are constantly being formed. So in our minds, we know the structure on a bigger time frame. But for us to get more detail, we go to a lower time frame. In that case, we come to the monthly time frame. And as we talk now, we still have about 4 days to the closure of the monthly candle. But looking at the monthly candle, we realize that it is also looking very bullish. Why is it bullish? We look at our highs and see whether our highs were taken out, and then whether our lows were being reached. So we have a high here, and we clearly see the market took it out. And now we have this high here, but the monthly candle has not yet closed. So it is difficult to say that this high has already been completely taken out from the monthly perspective, because the monthly candle has not yet closed. So with that being said, let's mark our lows and see. So this was a low, which was rejected into. So you can see we had this low, and then this low, which played out. So in other words, this is our support, but then the market seemed to have faked out and then went back inside. So that leaves us with a new low, which is this low here. Okay, so we know these lows are our support areas. Of course, we have another low here, which is our support area. So meaning at one particular time, if price is able to come to this support, these lows, we will look for a further reaction. And then we know there was a previous high which has been taken out here. So these are all our possible support areas. But of course, you don't need to put all of them there. You can work with the nearest one. So in that case, we are working with this, whereby the previous high was taken out and then the candle, then we have this. So this is the nearest we're working with. The rest can come in later in case price changes trend and is coming down. So we cannot consider this as our high because the monthly candle has not yet closed. But then how do we look at this on the weekly candle? So we can come to our weekly candle and see whether the market had actually closed above it. So this is the other week we were seeing, and then indeed the market actually closed above this. So meaning this high was taken out. So as this high was being taken out, we can now see this is our support, and then this is our possible support area. But then now on the weekly, we have a week here which has not yet been filled. And this week happens to be the highest this price has ever gone to. We don't have any more information around here. Okay, there is no data here, either on the left. So we can conclusively say that this is the highest level this price has ever has come to. And if this is the highest level, what do we expect? So if we are going to continue to be bullish like we've always been, that means this high has to be taken out, meaning the market will have to do this, takes it out, and then this can then become the next support area. But if that does not happen, then as we talk now, this will act as our resistance area, and this is our support. So this was our previous support, which was respected by the market. And now we have another support area here, which the market seemed to have wicked into and then went back. So we can get more information on the daily candle. So on the daily candle, we know clearly this is our support area. And now this is our resistance area, which is a high. We assume if the bullishness we had seen on the yearly perspective can actually continue, that means we could have a scenario whereby the market is actually taking away these highs. But if that does not happen, then we know this is where we could actually sell. Okay, so you can go to your lower time frame, whatever your lower time frame, and then now we can conclusively say that this is the next place which is going to give us a trading opportunity, which will be at this high. That is if we are to sell. But then if the sell does not happen, that means we can have a break into this, and then maybe this can become support. As simple as that. So this is our buyers on CHFJPY. You can clearly see how we broke it down from the highest time frame to the lowest time frame. So let's add one more JPY pair before we can cross into other pairs. So looking at this again, let's go to our highest time frame possible, which is our yearly time frame, because we now, as per now, we have 1 month and 4 days for the closure of the yearly candle. And if that is the scenario, we want to mark our highs and then our lows. If we are to mark this, you realize that this was our low, which the market was not able to reach. And then the market went and formed this high, which it took away. So this high was taken away. And now we have these other highs all the way here. Okay. And if that is the case, we now can say there was also other highs here which were taken out. See, so and then we had this high. So you can conclusively say from here, all the way from here to here, the market has actually been going up in the bigger picture, that is the yearly perspective. But we have, as we talk now, we have this high, which has not yet been taken out, so we can mark it, and then it will act as our next high, which will be our resistance as per now, because it has not yet been taken out. Okay, so if we have these areas which are clearly defined, then we don't have more information that we can actually spot all that. Or still, if we look left here, we will see this is also another high which has not yet been taken out. And then these other highs which have not yet been taken out. They can be too many, but the trick is to work with the nearest one. The one price is near to is the most relevant one. Like this one now is very relevant. As per now, it is a resistance. So if you want to understand more information here, we can come to our monthly time frame. And then on the monthly time frame, we can begin to analyze this like that. Now, from a monthly picture, we can conclusively say that this is a resistance area. Why is it a resistance area? Because price has not yet gone past it. So we will expect price to bounce here and maybe react to come down before we can target these other highs that we had before. Okay, so these are the other highs which were taken and how they became support. These were the highs which were taken and how they became support. And now we possibly could see this high and how it will become a support. But then also there were other highs here on the monthly which were taken out and how they became support. And we have this high, which is supposedly taken by this, but if you understand the rule, this will still have 4 days for the closure of this monthly candle. That means this is not our high based on the monthly candle. Maybe from the weekly candle, it could be our high. So let's go to the weekly because we have all information here digested, meaning these highs and then these ones here. And coming to the weekly for us to be able to understand the previous highs and the lows. So we have a high here, which has been taken out. because the weekly candle has closed. You see, this candle has closed bullish, meaning this is a high. Just the same way this weekly candle had closed to take away these other highs we had. Okay, meaning now the highs which have already been taken out, they automatically become our next support area. So this is a support, this is a support. But again, you work with the nearest support, meaning if price is able to pull back to this region, then this will be our support area. But then if it is broken, the next will be our support. So it's as simple as that. So we have our major resistance area here. But then it is good to notice how this week this is about to be closed. So that means this is also another high that if the market is going to continue bullish, meaning the Aussie is going to continue to be stronger than the yen, like the Swiss yen, that means this high has to be taken out, whereby this one will become our next support, the same way this was taken, and now it is our support. So for us, since we are out of data from this left, we've marked everything that we wanted to mark, and we want to see more specifics. We can go to a lower time frame. In that case, becomes our daily time frame. And on our daily time frame, this is definitely our resistance area. The same way this was our support area. So once we have this, and we can conclusively come to our lower time frame, in that case, we come to our 4 hourly. So what we want to expect and what we want to see on the 4 hourly candle. So now on the 4 hourly candle, this is our resistance area. And we are expecting price to react here and possibly give us some selling opportunities, or else we have to wait for price to be able to come back to all these highs and see whether this will also, where the selling opportunity would be. So that's what we have on the JPY pairs. You can look at the other JPYs on your own. Let's go into other pair. In that case, let's look at gold. Gold is at a very good key level. So with gold, let's go again to our highest time frame, which is the yearly time frame. So on the yearly time frame, we have these all-time highs for gold, which will act as our resistance area. And then we have these previous lower high, these highs which were taken out. Of course, we cannot say yes, this candle definitely closed, this yearly candle, so we can say this high was taken out. Okay, this not this current candle, which we still have 1 month and 4 days, but definitely this week, this candle, which is a doji candle, because we can see here it has longer wicks onto the upside and to the downside with smaller body. So that tells you an indecision candle. But again, you realize after this doji candle took away this previous high, the next candle here is also is headed upward. So this high, we can say it was taken away the same way this lower high was also taken away. This high, in the same manner in which also these other highs were taken away. And also this high is taken away. So once we have that, but don't also forget this high also taken out. So once we have that, we can conclusively say, are there more highs and lows we haven't marked? Definitely, there is one here. Why do we say that? It was also taken away by this week. So now we have no more information which we have not touched on the yearly candle. So with that being said, that means this is our low, but then we cannot call it a yearly low because this candle has not yet closed. We still have 1 month and 4 days to the closure of this. So with that being said, we can conclusively say we have diagonalized gold on the higher time frame from the technical perspective. Okay, and then after knowing the technical perspective of gold, because we are technical traders, retail traders, the next thing you will want to understand is the fundamental. What is gold in the bigger picture or in the mind of the investor? What does the investor think about gold? And this is where you begin to say investors think gold as a safe haven, meaning when there's economic uncertainties and also political uncertainties, people get their currency and then buy gold. So gold becomes a safe haven, meaning you can have gold, and then whatever economic policy that comes out of uncertainties like war or natural disasters, you can still have your gold value, and then later on, you can convert it to whatever currency you want to like. So from the investor's perspective and the political environment, we right now know that during COVID, gold was able to shoot to an all-time high. The same way during the Russian-Ukrainian conflict, gold was able to shoot to an all-time high. And now what do we have? We have the Gaza and Israel conflict that is actually making commodities to increase in value, including gold, although it is a metal. So once you have that in mind, you begin to understand, are we operating in a risk-on model or operating on a safe model? So with that being said, you know the technicals, you've put them in place, you have a glance at how the things are happening fundamentally. So we can go to more time frames where we can see more specifics and more detail, meaning we can go to a monthly candle, a monthly time frame. The monthly time frame, we already have our high, our supports and resistance areas clearly marked. So once we have that, can now come and look at the next high. So you can conclude that gold is actually bullish because you see this strong bullish engulfing telling you the market is likely to continue up, but then we still have this high which has not yet been taken out. So now only thing which could actually delay gold to continue to push up would be this high. But once this high is taken, maybe gold could actually push here. So this becomes our resistance. And as we have this as our support area. So looking at gold also from the highs and the lows. So on the monthly picture, you can say these were highs which were taken out. So market took away this high, and then we had also this high which was taken. So this one can just work. And then we have this high which was taken, and then gold came back and this became a support area. And then we have this high which is marked, and then now we have this high before we can think about these other ones, okay, and the rest. So if there's no more information that we can actually look at, don't forget about these highs which were also taken out. So we have these highs. Why do we say they were taken out? Because this candle has already closed, this previous one, but this one has not yet closed. So once we have that, we can come to our weekly, because we don't have more information we haven't touched. We come to the weekly chart, and on the weekly chart, this is what we have. So what are we working with? We are working with this high, which was taken out, and then we're working with this high, which has not yet been taken out, meaning this will act as our resistance area. So, and then we work again, this small high was taken out. So this will come your immediate support area. And I don't see much information apart from this high that we shall have to wait for price. And then we can focus on that if price is able to break. So for us to see more, we can come to the lower time frame, which is the daily. And then on the daily, this is what we have. We look for the highs which have not yet been taken out, and so that they can become our support areas or resistance areas. So we have this high which has been taken out on the daily, and then we have this high. So the moment you have support, you realize the market is actually trending to the upside before you could even draw a lot of things. So we have these highs which has also been taken out. So, and then we had this high which was taken out. Okay, it is hard to actually go and draw everything, but you can just stop here. So this will give you the confidence that yes, indeed, price is actually headed to the upside. So if you are to just, if you are to just add a trend line here, you will see this is what is actually happening. Okay, but of course, not to have too many information. This is support. So market is constantly making supports. And now we have these highs, which is our weekly high, coupled with these other highs. So when you come to your lower time frame, this is what you will have. So the reason for this is that this can give us the confidence and the belief that this was our support area, which held price because price came into this support, and now we have this support and this resistance. So we want to see what will happen when price reaches here to this resistance. Will it break it, or this is where we're going to have price continuing to the upside? So that is that. And That's what we think of gold. We can call it. Then let's come to maybe Bitcoin and try to understand how Bitcoin is behaving before we can go to maybe a dollar pair. So Bitcoin on the bigger time frame is looking bullish, but then that means if it is as bullish as is this, we have this high to wait for price, and then we have this low, which we can call our support, and how price has respected that, with this being our all-time high, which is about 68, 69, where Bitcoin has ever been. Then now, once we don't have any more information, maybe we have this high, which was also taken out. Okay, now the candle has not yet closed, so we cannot conclusively say that that is a high. So let's go to the monthly and look at that key level. So on the monthly level, what do we have? What do we have for Bitcoin? What highs and what lows do we have that have been taken out? So this was a high, clearly was taken out here. And then we have another high here, which has been taken out. So this is our nearest support. And then we have this other high here. Okay, you can understand why we are calling it a high because of this. And finally, we have this high and then this ultimate high. Okay, this is technical. So you put your technicals in place. So this is not yet a high because we still have 4 days to the closure of this. That means we can only see a high on the weekly. So coming into the weekly, this is the high, which we can conclusively say it has been taken out. And then that is our weekly support. And we have waiting for price to maybe head all the way up to here. And what do we have? We have other highs here because the week has closed. Okay. No, we still have 16 hours to the closure of Bitcoin, but these highs, we want to see how price is actually going to react on them. So let's go to the daily, and then maybe it is on the daily that we can say these highs are acting as resistance by now. And then we have this as our support area. So we have support and resistance area, but then we have these other bigger support, which has not yet been retested, and our bigger resistance here before we can think of this resistance. So once we have this on the daily, when you come to your lower time frame, which is the 4-hourly, it's now understanding how price is actually reacting here. Is this resistance holding price, or price will actually break it? So that is what we have on Bitcoin. Now, the next thing you need to understand is also what is Bitcoin. People treating it as an asset class, investment class, and stuff like that. You will also need to understand it the same way gold is the safe haven for currencies and stuff like that. Bitcoin is also regarded as the next digital currency, the digital gold. So many people actually try to buy crypto, which is Bitcoin also, in case of uncertainties. And the reason for that, you have to know crypto came to solve the issues of traditional banking system, the shortcomings or the failures of the banking system in terms of its being a central authority, and therefore there's no transparency in it, and then issues to do with double spend, high cost of transactions, and that cryptocurrencies like Bitcoin came into place to solve that, because with cryptocurrency, it is decentralized, meaning it's not centralized. Anybody can have their Bitcoin at their place. That is a big advantage. And then the other one is that the transactional costs. When I want to send Bitcoin or money, cryptocurrency, to another person through an exchange, if I use Binance or Get.io, any of these exchanges, the money that I will be charged for sending that Bitcoin is very low compared to what you can do with Swift transfer. When you're doing interbank transfers, you want to transfer a certain amount of money, let's say from East Africa to Europe, and you're using the Swiss, number one, the cost is going to be high. And then number two, it is not as fast as it is compared to crypto. Crypto is almost instant. But with Swiss, it will take you up to 3 working days, meaning not Sundays and Saturdays, weekends are out. So plus so many other loopholes that people see in the money banking system, like For example, we have what we call proof of work. If you look at the many currencies we have today, they have no proof of work, meaning they are not backed up by anything. Previously, money was backed up by gold. The amount of gold you have in your reserve should be equal to the amount of money you have in supply. But that is not the case if you read what President Nixon of US did and all of that stuff. So Bitcoin, like the traditional money, does not have what we call the proof of work. But with Bitcoin, you have a peer-to-peer network of computers solving puzzles and then rewarding people with blocks, meaning there is proof of work. We can trace it through timestamp. So once you have this, you have your technical align, that is your support resistance, and then you have also your fundamentals aligned together, you can be good to go. So let's just get one more dollar pair or the DXY, and then we conclude on our weekly outlook. So the DXY will determine how the other dollar pairs are going to behave. So whether the dollar is going to be strong or the dollar is going to be weak, the DXY will tell us. So you can begin to know how you want to trade the dollar pairs specifically. So this is the yearly. We go again, mark our highs. This is our all-time. This is our high, which was taken out. And then we have this high, which price is actually dancing around now. Okay, and then we have the ultimate high. But if you look at it from the yearly perspective, you realize the dollar, the DXY is strong, meaning the dollar is strong. Okay. But we have this wick which has been created and has not yet been filled. So we want to see more information. We can go to our monthly candle and begin to analyze it. All right. So on the monthly candle, what do we have? We still have the monthly candle not closing. We still have 4 days to the closure. That means we can only work with the information which has already passed. So let's continue to mark our highs, which have been taken out. So we had this high, which was taken out. And then we have this high, which was taken out. So this is our support. Okay, so you can see nothing is actually left out. Now this is our support. And then we have this high where we thought price would go to, but then price is actually not going to. So we have this high. Okay, so let's mark this high. And then now you can see that this other high, instead of it being taken out, is actually turning and doing the other way. So this was a high which we thought would be taken out so that we can come and work with this. We thought we would come and work with these highs and rest. But you see clearly it was taken out and then market breaks back down. That means this leaves us with this as our high as per this. But because this candle has not yet closed, we cannot say this is our low. But remember, this is our yearly support, high resistance, which price is actually playing around here. So now, for us to get more information, we go to the next weekly candle. So on the weekly candle, what do we have? So we were looking at this as our highs, but now look at the switch. Okay. Instead, we are looking at these lows being taken out. So we have our low, which is being taken out here. And then now we have, what do we have? So we see the whole of this. Okay. And then now, once we have something like that, we can say, where are the highs and where are the lows? So we have these highs here, which has also been broken below. Okay. And then maybe we have these lows, which is also high. But you can say that this level could actually work because now this is the yearly level, which price has closed below. Then maybe we can come to our daily. And then on the daily, to make things simple, we just need to continue to mark your lows and then your highs, just to be specific and have better and more accurate information. So we can say, let's look for highs and lows on the daily so that it can help us determine our next support and our next resistance. So we can say this is our low, which will be our support. Then we say this was a low which was taken out. So then maybe when we come to our 4 hourly, that is what we shall have. As simple as that. So now, instead of looking at the market the other way, we are beginning to see a scenario whereby we're having supports, resistance. So market forms a new low, pulls back, meets a resistance, forms a new low, pulls back, meets a resistance, forms a new low, pulls back here, and then does that. So this is what is actually happening. In the bigger picture, we are seeing constantly the market forming lows, meaning we are working with the lows now. So the dollar, to conclude, we can say the dollar is actually weak because the DXY is bearish, and DXY is constantly breaking the previous lows and forming new lows and failing to take away the highs. So this is what we have for today. Take care, trade well. See you again.